Hello, this is Dave, and welcome to Equities Story. And I'm with Wolf, and I
You
just
sure?
noticed. I've just noticed that purple. Wow,
There you go. See?
wow. What is that? Like, is that some Gucci from Poland?
Oh, well, that's actually very close to Gucci. It's actually Armani.
And I bet you that's real Armani, isn't it?
It is.
From
I paid a fortune. No, in Poland, everything's cheap, so
that's
I can afford
illegal.
it in Poland.
Those cheap knockoffs are totally illegal. You know that, Wolf.
It's
Anyway,
real. It's real.
Anyway, this is just general share advice, not personal.
I was like on special, like it was 90% discount, so I had to have one.
Oh, you
The
really
sales were around in Poland.
very smart, Wolf. All right, okay, let's get going. Can we firstly talk about AV1?
Yes.
Right, at Veritas. So we spoke with Matt Ratty the other day. Again, he had a group of very wealthy families in Australia. They said, you want to raise. They raised it 10 cents. And again, Wolfie, you're seeing private equity coming in with a cheeky bid around 11 cents. It's getting me annoyed now. I like the Americans are so on the ball, aren't they? They see our companies, they see the good ones, and they think, right, we'll pick that up for next to nothing. It's
the recurring theme, isn't it? In Australia here, we've got stocks that have been punished, not because they're bad stories, but because of the market dynamics, right? How things have changed with growth stories really on the nose, and all these long-term investors are going, thanks, short-term amateurs. We'll just take them and then probably release them back to you again, and you're going to love them at probably $1.
Well, I'll tell you what. I sort of knowing the story and knowing the interest in the story, I think this offer would be knocked back pretty quickly. Wolfie, the interesting thing is that this offer's come from one of the competitors,
yes,
and someone that really understands what they've got. Now that it's not just which is a big tick for the company, isn't it? It's a big tick for AV1.
Huge. I mean, it's a big tick for the technology they've got. I mean, for a big, I think $1.5 billion company to come and say, we like it, we want it. It's obviously a huge tick, but of course, it is, like you said, opportunistic. It looks so cheap, it's ridiculous. So I'd say, if I was in charge, go, thank you, but no thank you. Come back to me with something higher, much higher.
So anyway, listen, I think it's interesting because you see support. I mean, it's trading. It opened at sort of 9.5 cents. It might settle around 11 cents. For those people who like that sort of have that sort of appetite for a deal, I think I like the risk reward, and even
so do I. And you know what? It could bring out potentially out of the woodwork more competitors looking at this.
Yeah, so I think it really makes sense to have a nibble at this, even at 11 cents.
Well, it's not about 9.5. I'll probably have a little nibble at the moment on this, just for at least forget about it comes through, right? This this bid for the future. If you've got that long-term view, that already someone's interested in this bottom draw type story, right? You put it in there, but you probably have to have at least 2-year, 3-year time span.
And definitely, obviously, you want to get at 9.5, but I think it could open a lot higher than 9.5. That's what I'm saying. So,
isn't it already open at 9.5?
No, it did, and then it went into a hold.
Oh, okay. Okay.
So some trade, I know.
Yes.
Yeah. Well, you know what? Good for them. They had their eye on the ball, right?
That was a bit of unfortunate then, if that happens, because they should have done it before the market opened. But anyway, yeah, look, if it can get it below 11, of course, you'd probably go, it's still value, long-term probably value, as long as they increase their revenues, like we talked at least 10, 20 million bucks down the track, then there's definitely something in this that's looks fairly inexpensive and potentially good.
All right. So, I think yeah, like I said, look, the bids are coming in at 11. Maybe it might be somewhere around 10 cents or 10 and a half. But I think anything 11 and under, you'd have a look at it, wouldn't you?
Yeah, probably small little nibble, I'd say.
Yeah.
You know, I mean, I'd love to get it at 9.5, and I'm thinking, yeah, well, I'm probably protected now, right,
Yeah.
from the real bad lows. But saying that, let's just see where it opens. Maybe it will open by the end of the day, and we'll see where it takes us.
All right, now ASG, what did you think of that announcement? Pretty
Yeah,
good.
look, again, you know, the thing is with ASG, they really haven't give us anything negative for us to get scared, but the market's been what's the word? The market's been just very like, nah, you know, we're not too care about this company. So,
but when you look at the Babcock announcement, where they've got issues, inflation, you can maybe understand the market saying, okay, I get it. It's you're doing well now, but maybe in the future it's not going to be so easy. I don't know.
Correct. I mean that's probably what's happening here. So they don't care about your short-term successes now. They're probably looking for there'll be a recession next year, right? I mean, everyone's drumming that up. There's going to be recessions. Even here in Australia, could be a mild recession. So, you know, with that view, you think to yourself, would I be buying a stock like ASG, knowing that if it was a recession, maybe the cars won't be selling as much? I mean, yeah, I mean, I get it, right? I get it. So but they're still delivering the news. That's good. So at the end of the day, you got to make a choice whether you ride it out, because the recession could be here for 6 to 12 months, right? And if you think past that, is that going to still be a good company after that? Possibly, yes. And if you look at it now, say trading on 7.5 times, 12 dividend percent, I mean, it's pretty attractive, isn't it?
Yeah, so definitely. All right, next one, OCL.
Yep.
So this is annoying in a way, right? Because you invest in a company because they have a way of doing their accounting, but they suddenly change the way they're doing their accounting. Well, it's not so much accounting; it's the way they're invoicing people rather than
sell the product.
Long term, it's yearly, which arguably is better. It's better for the company, like you said.
Yes.
If inflation goes up, they can lift their prices higher. I totally get it. But it's not going to help the share price.
No, it's short term, absolutely not, Dave. Unfortunately, it kills the share price short term because the adjustments that are made on a one-off basis, mind you, right? This is what happens. Look at that price. Because what they've come up today and saying, guys, look, because we are changing the way we've done, we've told you about that. This is the results of this, and unfortunately, that's the results that have spooked the market. Means that instead of being a double-digit growth company, now they are a single-digit growth company for that financial year that they're going to come up with, FY23. And unfortunately, the profit's going to go backwards, Dave. I mean, that's the unfortunate thing, changing the way you do business. However, like you said, long-term, that's exactly what you want them to do. You want them to have control over the products where they can, you know, put inflation up, add more things to it, and so on, and charge more, whatever. Instead of selling the product once, get the money for it, and that's there. It's goodbye, right? Product, the buyer will have the product forever without any consequences. So you like what they're doing, but short term, unfortunately, and the market investors are very short term looking. So they look at that and go, nah, we're going to give this a miss for the moment. We're selling out on the back of that. And now they're probably going to say, oh, well, let's just see how your results are. And that might take 12 months to recover. But for me, long-term investor, I love this story, Dave. So in fact, I'm actually quite happy because I wanted to see it lower anyway. So apologies for anyone's in it, because obviously I don't want to see you lose money. But for investors, I'm not in it, and I'm thinking, my God, yes, this is the opportunity I've been waiting for. Give it to me, but give it to me lower. I want to see it at least 10 or lower, because it was trading on 50, 60, 70 times, right? So I still want to see a little bit lower, and hopefully we'll get that maybe over the next few months.
Yeah, well, I think you'll get it next week, by the way, the chart.
Well, okay. Well, look, I think first of all, we're going to wait till the dust settles, and that's what we're going to reassess.
All right. Talk about Kogan, because they can't recover.
No.
And this was Mr. Kogan was the hero of retail.
Yes.
What's gone wrong here, Wolf? Why? I mean, is it the economy? Is it or is it really just bad management?
Wet behind the ears, methinks, Dave. Even though he's, I suppose, good operator within his own little world, he's misread the whole situation with COVID. he's misread the whole situation with the share markets, how he sells shares. There's a lot of things that he's unfortunately failed on in that regards, which just shows the missteps of the management. This is what's happened, right? Now it's come back.
Yeah, and you can't blame him for it, because it could be the management, the board, it might not be just him, right? So
yeah, but I suppose you've got to blame someone. So let's blame the company for doing the missteps. And this is what happens, and it's going to take a long time for it to recover. And yesterday, when I talked about it on the video, there was some shoots that's, we're seeing a little bit of like the inventory is coming down, which was, remember, a big problem for them, where they bought a lot of stuff for COVID and unfortunately didn't sell it because the COVID ended pretty quickly, right, for them. Yeah. So they were stuck with all this stuff, and the inventory, they had to pay so much money for warehousing costs and everything else. So that was the problem. So now they reduced their inventory significantly, where the costs have gone down. So that's the positives there. However, the actual sales at this stage are still very lackluster, right? So I'm just looking at a update from Morgan Stanley, and I'm telling you what they say, and it's not pretty, I have to say. So Credit Suisse has got, sorry, it's actually not Morgan Stanley, Credit Suisse. Rates KGN has underperformed, so basically a sell. So reported no material changes in sales and gross profits trend to the end of October, with declines continuing. Gross sales for the first months for this school have declined 38%, right? While gross profit has declined 40%. So they're just really not happy with how the things are going. So they're still sticking to the price target, and it's really poor, $2.73, Dave. So they are really, maybe they are outliers on the negative side, right? But they are not very happy with Kogan.
Right. Okay. Yeah.
So we're not buying this. We're not trading this. We're sticking away from the moment.
We're definitely sticking away from it. Wolfie, so just having a quick look at Einstein's, because there wasn't that much news today.
Mm-hmm.
Generally speaking, some of the buy signals, it's only week one. So remember this is normally a 4 or 5 week plan, but SXE had a nice move. Some of these more, can I call them high risk buy signals? I think DVRs had a nice little move. It's starting to go. TNG, one that has starting to go and broken through resistance. One that hasn't quite gone yet is MMS, and this was my favorite one. And I like the story, but you know what? The price action is still good, so it's still a hold. Yeah. Yep. Just having a look. A2 milk is still looking good and going. I think you put you like that CLX yesterday. And obviously we had that on Einstein's, and it's crazy.
Yeah, right there, up there.
Yeah, so there it is. So it's crazy how the charts can pick the news, isn't it?
Yes, we've picked the news, and we just went hard at it yesterday.
Yeah. And you've got generally speaking, COS, which is the story that we like. I mean, it's sort of flirting up back towards that 70 cents. So it's, generally speaking, up and down market. ASG was on there as well.
Yeah.
And again, had a nice move up 5%, and I don't know. I think you'd still be holding it after that announcement. So, yeah, generally speaking, pretty pleased. Wolfie, what I did do this morning, because I'm going to go on Ausbiz and look at some charts that later after we've done live. Yeah.
Come on. And your genius charts. Which ones you like?
Well, this one's I like, right? And I just want to talk these through with you. LAU. Again, I love the price action. I like the 8% dividend and the P of 9. So it's and I like the growth, 32% growth, right? So that for me,
also have to like the fact that CTI, which is in pretty much the same space, came up with such a big positive announcement yesterday, right?
So CLX, yeah.
Yeah, well, so you've got to go, well, this sector is actually pumping.
Well, it is, and this is why I thought okay, I know it's not sort of logistics, but even the Qantas, right? Travel. I mean, I like the Qantas, the price action, the risk reward is looking good. Slightly, you've got stop loss below 6, and with the euphoria around travel, could it go higher? And I think possibly it could, right?
So it's interesting. I saw an article from some of this business people saying that they're flying Qantas normal, like just normal seats, but they're paying business prices. So you can see that's why Qantas is making like $1 billion a day in profits.
It's crazy stuff.
I
still like, even after the move, right? I still like with you. I still like the price action on CLX. So again, I mean, you've got to scratch your head a little bit, right? So 60% growth, and those aren't off small numbers, right? You know, sometimes you get 100% growth from like $100 grand,
$1 million, right?
$1 million, right? They're not small numbers. So,
No.
right, you've got to have a look, right? You've got to say, you know, I'm good. I don't have a decent dividend. I've only got 4%, right? It's not sort of get out of bed, right? Stuff, but again, Wolfie, I've still got it now, only trading 8 times.
Exactly.
So
exactly.
I mean, great call yesterday. Fantastic. I think it opened at 155, but I think in some ways, I think this could have gone higher.
And I think it will with time.
Yeah.
So for me, because it's so cheap, the dividend is actually quite good. And if you gross it up, it's about 5.5%, right? P at 8. So on these numbers on 60% growth, let's see, you know, let's say it's half the bottom line. Let's go 30% growth on NPAT, right? Let's just be conservative. It's still going to put it probably around about 5 times if they can, you know, come out with those sort of numbers. So I'd say probably still, you know, it's got the legs easy to get up to $2. That's what I'm thinking, right? It might take a bit of time, but as long as they can keep delivering, and the market at the moment possibly is that for them.
Well, yeah, and it's funny, isn't it? You're just seeing this LAU, the same sector, CLX, Qantas, I know slightly different, but those sort of transport sectors, all looking pretty yummy, right? So now another one I like was TLG, and I know this is your preferred graphite play, but you have to like the price action.
I love the price action here.
Yeah. So
if you're going to be having a shot at a graphite, I reckon that's the company to go for.
Why?
Because I like the technology. I love the fact that the Swedish graphite that they've got is probably top class, right? Better than everything else I've seen out there. So you're buying quality, you're not buying, you know, stuff in Mozambique somewhere that's under the some sort of junta.
All right. The other one I like is this, and you might like this if it holds up by the end of the day. Is QBE. So it's been a real underperformer, right? And it hasn't really got going. But you know what? This is breaking out this week, and it hasn't done that, but it's for a long time for a sort of 2-year highs. Can I ask you why?
They actually had not a bad update recently, but the response was really lukewarm. But when you look at why it should be going up, it's because of the interest rate rises. Every interest rate rise, and remember, they've got, you know, billions and billions of dollars of probably cash and some sort of instruments, some interest rate instruments that they can actually make more money off. Holy moly, this is the sort of stories you should be looking at. So again, Dave, that's the sort of story you should be probably going through Ausbies and going, guys, it suits this environment beautifully.
All right, I think it does. You've got SFR. Again, looking pretty yummy. Wolf, again, quite like it. More high risk. So most probably I'm not going to put that one on. No. And I like VUK. Great announcement, and that breakout, and it's still going on with it today. Bloody hell. Look, I mean, hello.
Yeah, that's a nice looking chart. This one's your mother country, so you should be able to you know, give a good spiel on that one.
Right. The last one, but not least, which I don't think I'll put this one on, but I want to mention it to you.
Yeah, go on.
West Farmers.
Oh.
You know that you've got to. You know, it's been in a downturn. It's sort of broken out, and it's broken above resistance. So
it's saying hello, isn't it?
It's saying hello. So, I'm trying to understand, you know, what's turned the sentiment on this story, Wolfie?
I don't know, because when I went to Bunnings the other day, there were empty shelves in certain parts. So I you know, they're still struggling with logistics and getting the products they need overseas. So I'm not sure where it's coming from, to be honest. Is it coming from Mount Holland? You know, the lithium? I don't think so, because the lithium's gone a little bit quiet at the moment, right? So I don't know where it's coming from. Pass. Yeah, I'm stumped.
All right. Okay, but
It's looking good. I mean, the thing is, it's a
Yeah.
quality company, right? We know that, but there's no catalyst for me. That's what I'm probably just trying to say. There's no catalyst for me to see that going up like this.
okay, well, maybe they're going to have a better announcement soon. Maybe things are picking up. Maybe things are picking up. Listen, on that note, Wolfie, thank you so much, mate. You're always absolutely brilliant, and I'm going to see you live at 12 o'clock. Nothing better. No,
Queensland time.
are you going to wear that purple?
Yeah, of course I am. We're gonna go. Just wear glasses, sunglasses.
I'm actually, yeah, I like you. I'm liking the bald look, Wolfie. It's good.
Yeah, thank you.
You got the head that can wear it. You got the, yeah.
I was always afraid that my head is a bit bumpy, so I thought, oh my god, I'm never gonna shave my head. But my lovely Natalie said, no, you'll look fine.
How's that investment into your little egg paintings going?
Egg paintings?
The little egg drawings. So what is it? Eggs or those things that you bought from PLY?
Oh no, that's a disaster.
What is it? It's not eggs.
It's all gone. That's a disaster. I don't want to talk about it, Dave. Just a bad timing, unfortunately, by the looks of things.
All right, you're filling our members full of confidence.
Hey, you got to learn about these things, and I learned it the hard way. Luckily, only allocate a very small amount of this sort of stuff.
All right. Thanks, Wolfie. See you, mate. Take care.
All right, see you. Bye.
Bye.